Greetings. Today I want to talk about the 5 types of taxes. And my motivation for making this video is because I think the modern tax system in a lot of countries is bad, and I think it's important for people to understand the tax system, understand the inefficiencies and problems associated with the tax system, and then consider alternatives that we can push towards that can change the tax system and create a better and fairer and more efficient tax system. And that's why I wanted to make this video. I think people should understand first the tax system, and then people should understand the problems and inefficiencies with the tax system, and then we can talk about what alternatives we can choose and we can work towards. And especially if you're one of these action takers watching my video and have influence on policy and want to push towards new policies, then this video is for you. But even if you're just a regular person who doesn't necessarily have a lot of influence, I think it's still good for you to understand the tax system so you can make better decisions both for yourself and for society when we consider what alternatives we can push for and a better tax system we can work towards. And especially if you live in a democracy, this is something you can participate in and you can speak about and you can encourage others to push towards. So that's my main motivation for making this video. So let's talk about the 5 types of taxes. So the first type of tax is taxes on what you buy. So examples would include the sales tax, the value added tax, or the VAT. And the value added tax is basically a sales tax, it's just administered a bit differently. So whereas a sales tax is collected at the point of sale of the end good or service, the value added tax is collected throughout the production process and for the sale as well. And it's more efficient than the sales tax, and it's also more, it's less likely to be cheated on. People are less likely to cheat on the VAT because throughout the process, the value-added tax process, when businesses record the VAT process, they can get refunds at the end when the customer finally pays for the end product or service. So VAT is basically a sales tax, but more advanced and more efficient and less likely to be cheated on. So the next example would be the stamp tax, which is basically a sales tax, but for property transfers. And the history behind it is that historically, for property transfers or for legal documents, there had to be a stamp, and people had to pay the stamp tax or stamp duty for that legal transfer and legal process to be legally complete, and they paid that stamp tax. But it's basically like a sales tax, but for big properties or like assets and real estate and properties like that, instead of the goods and services that sales taxes focus on. Another example would be the import tax or tariff, where you have to pay taxes when you import something. And another example would be the payroll tax on employers. So when employers pay employees their salaries, they pay a payroll tax to the government, which is basically like a sales tax, but it's a sales tax for labor. And the import tax is like a sales tax as well, except it's a sales tax for imports rather than domestic goods and services. So basically, they are taxes on what you buy. And personally, I think taxes on what you buy are a legitimate form of taxes, which is something I won't say the same for the other taxes that I will talk about later. And the reason why I think it's legitimate is because the government does work to guarantee that legal processes are fulfilled and that you are able to buy and sell things properly, without theft, without being cheated on, without fraud. The government does do a job in protecting that process of buying and selling. So I think it's fair for the government to say you have to pay a consumption tax or a tax on what you buy, so because the government does protect that process, that the government does guarantee that you can do so safely and securely, and that you don't get stolen from and you don't get defrauded. So that's something I think it's a legitimate form of taxation. So the next type of tax I want to talk about is taxes on what you earn. And examples would include the income tax, the corporate tax, which is basically an income tax for corporations, the dividend tax, which is a tax that is levied on dividends. So when you collect dividends from corporations, when corporations earn profits and they distribute these profits to their shareholders, these are called dividends, and people pay a dividend tax if applicable. Not every country has a dividend tax. And then another example would be capital gains tax, which is a tax you have to pay for your profit or earnings from investments, especially longer term investments. And I think taxes on what you earn, they are in theory legitimate, because like I said before, the government does guarantee the safe and secure process of buying and selling, and that includes earning money. The government does protect you in terms of making sure you don't get defrauded, making sure if someone promises to pay you, they do pay you. They guarantee the process or the sanctity of contracts. So by theory, taxes on what you earn are legitimate. But I think the problem with taxes on what you earn is that, first of all, they are unnecessary, and second of all, they are inefficient. And if you haven't noticed already, I'm in quite a cold environment right now, so if I'm speaking like I'm cold, it's because it's cold right now. And yeah, so in case you're wondering, it's a bit cold around me and I wore a thinner jacket than I should. But anyway, back to the video. So taxes on what you earn, they are legitimate, but the problem with taxes on what you earn is that they are unnecessary and inefficient. And the unnecessary part is that taxes on what you earn are basically going to be from the money that you get paid from other people. So when people buy something, when people pay you money, they are already potentially going to be liable for consumption taxes or taxes on what you buy. So if you're a business and you sell to people, your income is going to be from people that buy and pay for your goods and services or assets that you sell. And because they're already buying these things, they can just charge a consumption tax, a tax on what people buy, and that tax is already collected. So when you have taxes on what you earn, then that is kind of unnecessary, because that your earnings are from people who are buying your things or for paying for your services. And the things people buy, the things people pay, the services people pay for, they can be liable for taxes on what you buy, the first category of taxes I talked about. So it's a bit unnecessary, and even it's kind of like a sneaky way for governments to double tax things. Like, people pay for your goods, services, or assets, people buy your things, people pay for your services, for your work, and they can be charged a tax for paying for these things. and now you earn money, and they want to charge you a tax again for the money you earn. And I think this is unnecessary, because your earnings are already coming from people paying for things, and people paying for things can already pay taxes on what they pay for. So I'm going to grab a sweater to put underneath my jacket, and then I will continue with this video. So wait a moment. So I'm back. I put a jacket underneath my jacket, and now I feel a lot warmer. And I'm in a part of the world that is quite cold right now. It's October, but it's quite cold in the part of the world I am. And yesterday it wasn't so cold, but today it got colder, and earlier I was indoors with indoor heating, so I didn't realize how cold it was today. So when I went out to film something, I only wore my one jacket, and it wasn't enough, so now I have 2 jackets on. So anyway, my update for this situation. So let's get back to what I was talking about taxes on what you earn. So I talked about how it's unnecessary, because the money you earn is from people paying for your things, whether it's your products or your services or your assets. When people pay for these things, they can be charged a tax for what they pay for, like the consumption taxes or taxes on what you buy. That was the first category of taxes I was talking about. So because they can be charged taxes for that, it's really unnecessary to charge taxes again on the things you earn when there's already a tax on those payments, and that's how you earn money. But the second thing with taxes on what you earn, or the second problem, is that they are inefficient, because they involve a lot of paperwork, they involve a lot of complications, and there's also a lot of loopholes as well for taxes on what you earn, like especially for corporate taxes. Corporations take advantage of a lot of loopholes to get around or minimizing the taxes they have to pay. So it's inefficient because of the paperwork, and it's a more inefficient way of taxing people. People actually do try to avoid or minimize these kinds of taxes. They don't want to pay these taxes when they are making money. They want to make as much money as they can, and they will try to minimize these taxes. And I think a third problem would be the incentives. Placing the wrong incentives on the wrong things, or placing the wrong disincentives on the wrong things. I think people trying to make money is a good thing. They're earning for themselves, they're earning for their families, and they're being productive. And when you place taxes on productivity, that sends the wrong message, and it also discourages or disincentivizes productive activity. So I think that's a problem with taxes on what you earn. There are 3 problems. Unnecessary, because you are getting the money from people paying for stuff, so they can just pay consumption taxes or taxes on what you buy. And the second problem is it's inefficient because of a lot of paperwork that goes on with taxes on what you earn. And the third problem is it puts the wrong disincentives on the wrong thing, which is productivity. You shouldn't disincentivize or discourage productivity. A good society should encourage and incentivize productivity. So that's why I think taxes on what you earn, like income taxes, corporate taxes, dividend taxes, and capital gains taxes, I think they should be abolished, and we should just have taxes on what you buy, because what you earn comes from people buying things or paying for things. So if they can pay taxes on what they buy or what they pay for, then you don't really need to tax again the things you earn, because how you're earning money can be taxed through the consumer, through the buyer, through the person paying the money. And that's what I think. I think taxes on what you earn should be abolished. Now, the third category of taxes I want to talk about is the category is the category I consider absolutely evil. And I think this category needs to be completely abolished. It has no legitimacy, and this category is taxes on what you own. And that includes, for example, property taxes. It includes death taxes, which are also known as inheritance taxes or estate taxes. And it includes the wealth tax. And I think this category is really evil, because when you own something, it should be yours. And if you have to pay money to keep it, then it's not really yours. Then you don't really own it. Like if you have a house and you own your house and you have to pay property taxes to keep your house, you have to pay money to the government to keep your house, that's basically extortion. It's basically theft, and you don't really own your own house if you have to pay money to keep it. It's like paying rent for something you own. And it's the same for wealth taxes. You just own things, it's yours, and you have to pay money to keep it, or else the government will confiscate your property, confiscate your wealth. And I think it's just theft, because you don't really own something if you have to pay to keep it. If you have to pay to keep it, then you're not the real owner. And if you don't own something, then that's a violation of your human dignity, your human right. You can't even own something. You're basically a slave. And for inheritance taxes, death taxes, estate taxes, I think it's also extremely evil. Because when you have wealth, it's not just for you. It's also for your family, your children, your grandchildren, your great-grandchildren, your descendants. When I make money, when I build wealth, it's not for me. I'm not only thinking about myself. I'm thinking of my future children, my future grandchildren, my future great-grandchildren, my descendants. I'm thinking of them. And my wealth is for them eventually. It's going to pass on to them. And when I own something, when I own my own wealth, when people own their own wealth in general, I think it's a very dehumanizing thing to think that people are these atomized beings that are separate from family, separate from their children, separate from their grandchildren. It's not how humans work. Human beings are connected to their children, their family, their grandchildren, their descendants. Their wealth is not just for them. It's for their family, and it's for their children and descendants. And I think thinking of people in this way, and I think the justification a lot of people use for death taxes is you get to enjoy it in your life. So after you die, you pay because you've already had you already had your life. So why not just give it to the government? But that's not how humans work. We aren't these dehumanized, atomized beings without children, without family. We are social creatures. We are human beings with families, with children and grandchildren, and our wealth is for our families as well. It's not just for us individually. We're not atomized beings. We're human beings with families and loved ones, and our wealth belongs to our families as well as ourselves. And I think inheritance taxes, death taxes, estate taxes, they kind of challenge, they kind of attack this concept of family, of human dignity, in terms of a human being part of a family and not just an atomized being. And that ownership isn't just ownership for yourself, it's for your family as well. And I think that's what's so evil about death taxes. And I also think that when you own something, even when you die, it still belongs to you, and your children are, they're your blood, and they carry on your blood in the next generation. So it's basically keeping ownership of the things you have. And like I said before about the problems with property taxes, or the evil with property taxes and the evil of wealth taxes, if you own something, you shouldn't have to pay money to keep it. The government shouldn't have to make you pay money to keep the things you own. And that includes keeping it in your family, because like I said, I don't believe we as human beings are atomized individuals. I believe we as human beings are part of families. And keeping the things you own to your family should be a human right. And that's why I think inheritance taxes, death taxes, and estate taxes are so evil. And I think property taxes and wealth taxes are evil as well. They're basically theft. You shouldn't have to pay money to keep the things you own. When you own something, you own it. And it's also kind of like double and triple taxation, because when you earn money, people pay for things and they are paying for taxes on what they buy. So the government's already collecting taxes on that. And if you have taxes on what you earn, like income taxes and corporate taxes, you have to pay additional taxes. And the government is collecting taxes on that. So that's like double taxation. And then when you die and when you own things, you have to pay taxes again. So it's like triple taxation. So it's like theft, and it's evil. So I think taxes on what you own are completely evil. They should be abolished, and they have no legitimacy at all. Like, taxes on what you earn, they have legitimacy, but the problems with that are they are unnecessary, because people can just pay taxes on what they pay for, and they are inefficient because all the paperwork going around, and because it puts the wrong disincentive on something good. So it disincentivizes productivity. But with taxes on what you own, it's just completely evil, has no legitimacy, and should be completely abolished. Now, I want to talk about another category of taxes, and that's taxes on what you do. And an example of that would be the Pigouvian tax, which is taxes to discourage certain activities. I was going to say certain behaviors, but I think certain activities would be a better description. And these are activities that governments think are bad, but not bad enough to make illegal. So some examples would be carbon taxes. Some governments don't want people to emit too much carbon, and they place taxes on these. Personally, I think that's I'll avoid commenting on that, but I think it's a bit too much. And another example would be like alcohol taxes, like maybe taxes on producing alcohol, and basically taxes on what you do. So the government would tax you on some activities that you do that they don't like, or they don't like that much. They think it's kind of bad, but not bad enough to make illegal. So you can do it, you just have to pay a tax for it. So these are taxes on what you do. And I'm not going to talk too much about it. I think there are some activities that should be discouraged and possibly made illegal, but some governments, instead of making it illegal, they would just try to discourage it. And it's a different way of governing, I guess. It's like discouraging instead of making something illegal. And personally, I think I wouldn't support the carbon tax. I wouldn't support the alcohol tax. Cigarettes, maybe I would support, like taxing people producing cigarettes, taxing them extra for making cigarettes. That's something I could support. So I guess on a case-by-case basis, it could be something that I think could be okay, but generally it's not one of the major taxes. And yeah, if there's something like an activity you think is bad but not bad enough to be illegal, I think it's something that governments can do. So personally, I think taxing people for producing cigarettes is something I think is okay. And the fifth type of tax is a general tax. So this includes poll taxes or head taxes, and it's basically a tax on every tax liable individual. And historically, it's a lump sum tax. So historically, I guess in the US there was a poll tax, but there's no penalty for not paying it except you can't vote. And that's, I think, for certain states. It's not for every state. And in the modern world, I don't think, or of the examples I know of, I don't know of an example in the modern world today of a poll tax or a head tax. And yeah, so it's basically a lump sum tax on every tax liable individual. I think it's more of a historical thing because in the past it was just easier to charge everyone the same amount of money as a tax. But nowadays we have more advanced and more developed systems, and when we have taxes on other things, you don't really need a general tax like a poll tax or a head tax. And so I think in the modern world, a general tax like a poll tax or head tax is just unnecessary. And it's also it also doesn't really work that well because not everyone has some money to pay for a poll tax. Some people are just broke, they don't have money, they're bankrupt, and they can't pay. So I think it shouldn't be used anymore. So yeah, these are the 5 types of taxes. I think poll taxes or head taxes, the general tax, they're a thing of the past. They shouldn't be used. I think taxes on what you earn are inefficient, they are unnecessary, and they disincentivize productive activity, so I think they should be abolished. I think taxes on what you own are completely evil and should be abolished. I think taxes on what you do, in some cases, they are okay if they are discouraging a bad activity, but an activity that's not bad enough to be illegal. And I think taxes on what you buy are legitimate, and they should be the only taxes we should have. And they are a lot simpler than taxes on what you earn. People don't make great efforts to manipulate and avoid these taxes, because when you're already buying something, when you're already paying money for something, your mindset isn't on, it's not necessarily on minimizing your payments like it would be for when you're trying to make money. When you're trying to make money, you want to make a lot of money, and you don't want to lose money to taxes. But when you're just buying things, if something costs more because of taxes, that's not necessarily going to stop you from buying it. And when you think of how, if such a system would be implemented where all the other taxes would be abolished and we only have taxes on what you buy, then you would probably feel like, oh, you get to keep the money you earn, you get to keep your property without having to pay the government like it's extortion and have to pay the government to keep it, and you feel a lot more secure. Then you might be okay paying more money for the things you buy through these consumption taxes, through these taxes on what you buy. And these are taxes that are a lot simpler to collect and a lot more efficient, and they make sense. They are legitimate because the government does guarantee that you are able to buy and sell things in safety, in security, and you don't get defrauded, you don't get robbed. The government does protect you from that. So it's something legitimate, and it's something that I think makes sense, because it's better to place a tax on what you buy than place a tax on what you earn, because that's disincentivizing productive activity. And also, I think when you place taxes only on what you buy, people are going to be more mindful of what they buy. They're not going to buy, or they're going to buy unnecessary things a lot less, probably. And they're going to focus on buying things that really matter. They're going to focus on buying things that really contribute to their lives. And I think that's a good thing. I think it encourages the right behavior. It encourages savings. It encourages investments. It discourages frivolous spending on unnecessary things, spending on stupid things, spending on the sake of spending. It encourages people to spend on things that really matter. And that's why I think taxes on what you buy should be the only taxes, with the small exception of these taxes on what you do when you want to discourage some activity that's bad but not bad enough to be illegal, like producing cigarettes, which I could get behind. So that's what I want to talk about today. I want people to understand the types of taxes we have and how a lot of taxes are unnecessary, inefficient, they disincentivize something good, or just outright evil, like taxes on what you own. I think they are completely evil. And I think a lot of these taxes should be abolished, and taxes on what you buy should be sufficient for the government and legitimate as well, because of how the government protects this process of buying and selling. So yeah, I think that's the system we should push towards, a system where we basically only have taxes on what you buy, with some taxes on some bad activities that we want to discourage, but these activities are not bad enough to be illegal. So I hope you enjoyed my video. If I was speaking a bit like I'm cold, it's because it's actually cold in the part of the world I am, and I didn't realize this until I came outside to film this video, because it wasn't too cold yesterday. So that's why you may have noticed I was speaking like I was cold. But anyway, regardless of that, I hope you enjoyed my video. If you did, please like my video, comment your thoughts, and subscribe to my channel. I'll see you in the next video.